Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. The International Monetary Fund's (IMF) delegation visiting Iraq recently made a particularly powerful statement that reveals the strategic direction of Iraq's future financial policy and how closely it is now aligning with international expectations. They emphasized two central themes in their remarks, both of which, when looked at closely, suggest a critical turning point not just for Iraq's internal financial architecture, but for how Iraq wants to operate within the global economy. These themes are, first, the importance of building and strengthening relationships with foreign correspondent banks, especially in the context of financing foreign trade, and second, the need to support and expand the use of the Iraqi dinar in economic transactions. This isn't just a routine statement from a global financial institution. It's a statement with far-reaching implications that strikes at the heart of Iraq's monetary sovereignty, economic stabilization, and eventual integration into the global financial system. For investors, policy observers, and anyone watching Iraq's financial reforms closely, this is the kind of language that signals deep structural shifts. Let's break this down and explore what this actually means for Iraq and why it matters in a global context. To begin with, correspondent banking relationships are a cornerstone of international trade and cross-border financial operations. They are what allow a domestic bank in one country to access financial services in another country through a banking relationship. So when Iraq engages in trade with, say, Europe, Asia, or North America, correspondent banks in those regions help facilitate payments, clear transactions, settle trade accounts, and move money in and out of Iraq's borders. These are the same institutions that verify funds, provide financial credibility, and give Iraq's banking institutions access to the global payment infrastructure, particularly the US dollar system, SWIFT network, and international trade finance markets. In recent years, Iraq's relationships with foreign correspondent banks have been strained for several reasons, ranging from outdated compliance systems, vulnerability to money laundering, weak anti-terrorism finance controls, and a lack of digital infrastructure. Much of this stems from Iraq's post-war recovery and the transitional state of its banking sector. While some Iraqi banks have improved in terms of digital compliance, governance, and transparency, others have remained underdeveloped, creating risk and uncertainty for foreign banks that might otherwise be willing to partner with them. This has resulted in several U.S. sanctions on Iraqi private banks, increased scrutiny by the Treasury Department, and a reduced number of foreign banks willing to hold accounts on behalf of Iraqi institutions. Without these relationships, it becomes incredibly difficult for Iraqi businesses to conduct cross-border trade using their own currency, or any currency, for that matter, because the ability to convert funds and settle international transactions securely is impaired. Third, and perhaps most strategically, using the dinar in foreign trade paves the way for a future revaluation or float. This is something that investors and economists have debated for years. If the Iraqi economy continues to stabilize and the country moves toward WTO accession, modernizes its financial infrastructure, and restores trust in its banking sector, the natural next step could be to reprice the dinar in a way that reflects its real effective exchange rate. That is, rather than using a managed peg to the dollar, Iraq could adopt a more flexible exchange rate regime or even redenominate the currency altogether, something that many believe has been in planning stages behind the scenes at the central bank. The good news is that the Central Bank of Iraq seems to be listening. Recent moves suggest that the CBI is already working to improve transparency in its dollar auctions, enforce tighter controls on correspondent bank dealings, and streamline licensing and digital compliance for banks. It has also begun promoting the use of dinar-denominated POS systems and digital payment platforms domestically. In tandem with international assistance and technical support from the IMF and World Bank, these reforms could help Iraq move toward a financial system where the dinar is not only stable but also respected abroad. Still, the road ahead is long. Trust cannot be built overnight. It requires sustained reforms, political stability, and transparency. Foreign banks will not partner with Iraq unless they can be assured that compliance standards are airtight, that regulatory enforcement is predictable, and that the risk of reputational damage is low. This means that Iraq's internal reforms must continue at full speed. The legal system must support contract enforcement. The government must ensure that anti-corruption efforts go beyond slogans. And most importantly, financial inclusion must expand so that all Iraqis, not just elite businesses or state firms, can participate in the formal economy and use the dinar with confidence. This is where the IMF statement takes on a visionary tone. It's more than just a checklist of banking tasks. It's a call to action, a reminder that Iraq has the potential to be a strong regional economic player, but only if it seizes the moment and does the hard work of financial reconstruction. And that reconstruction isn't just technical, it's philosophical. It's about deciding that Iraq will no longer be a passive consumer of foreign currencies and foreign financial systems, but an active participant in shaping its own financial future. So yes, for those who understand the weight behind this IMF statement, it really does feel like a drop the mic moment. Because in just a few carefully chosen words, the IMF managed to capture both the challenge and the opportunity facing Iraq. The challenge is to fix broken systems, rebuild trust, and modernize fast. The opportunity is to create a stable, sovereign, and respected national currency that can carry Iraq into the next era of prosperity. And when you zoom out and consider Iraq's vast natural resources, its central geographic position in the Middle East, and its young, tech-savvy population, you realize that if Iraq can align its banking system with global standards, the rewards could be enormous. The IMF knows this. That's why their message was so direct. And that's why this isn't just about foreign correspondent banks or domestic payments. It's about reclaiming national dignity through sound money. That, in the end, is why this statement matters. Because when a country stands behind its currency and the world begins to believe in it too, that's when real change begins. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed and stay ready.